In the early 1900s, a millionaire trader forms an opinion on cotton. His knowledge and experience signals him that the cotton is going to rise massively in the next few weeks. But the move wasn't starting. He runs out of patience, and thinks that maybe a small upwards move will cause the other buyers to get in, and the momentum might continue. Because he used to trade in huge quantities, he thought to initiate that move. So, he bought 20,000 bales of cotton at market price, which made cotton to rise by 15 points. But next day, cotton fell back to its original price, and stayed there for weeks. Finally, in disgust, he sold out all his stake in cotton and took a loss of around $30,000. A few days later, he made same trade again. Because he was convinced that cotton will rise, and he didn't want to miss out on that move. He got in again, same thing happened as the last, and he was down $30,000 again. His conviction of the move was strong, and the fear of missing out on that move was so intense, that he repeated this process 5 times in a span of 6 weeks. He lost around $200,000 in total. He was so disgusted that he instructed his manager to remove the cotton ticker from his watch list, because he didn't want to even look at it anymore. 2 days after he had the ticker removed, the market started up and it never stopped. Cotton rose 500 points. He stood out on what could have been the best trade in his career. Finally, he missed out, which was his greatest fear. The millionaire trader in the above story is none other than Jesse Livermore, regarded by many as the greatest trader of all time. He narrated this story in his book, How to Trade in Stocks. In the book, he himself acknowledged that had he waited for his pivotal point, which is another name for a support or resistance level, to pass, he would have made a profit of more than 200 points. But because he wanted a few extra points, he took the trade several times, and lost. Not only that, he missed out on a great trade, even though his conviction on that trade was right. That's really painful. This is a textbook case of fear of missing out, or FOMO, in trading. At its core, fear of missing out is nothing but your greed in action. FOMO is the sensation that opportunities are slipping away, and you have to get in or you would miss out on this big move. This undoes all the lessons and principles you've diligently acquired in trading for the lure of quick profits. The fact that Jesse Livermore had such a strong fear of missing out makes us realize that no matter how successful trader you become, fear of missing out is always going to be there. So, instead of ignoring or downplaying this feeling of FOMO, accept it and recognize it for what it is: greed in action. So the question arises, how do we deal with it? There is only one solution to this problem: being mechanical. You have to disregard everything, and focus on what your system is signaling. Everything apart from your system, whether it's news, external opinions, or even your own emotions, is just noise. Allowing your emotions to dictate your trades will set you on a downward spiral, which will not only deplete your financial capital but also erode your self-confidence. A trading system or a trading plan is a comprehensive set of rules, guidelines, and parameters that a trader follows to make informed decisions about when to enter, exit, or manage positions in the financial markets. It serves as the trader's roadmap, offering a structured and disciplined approach to trading. Even Jesse Livermore accepted the fact that had he respected his trading plan and waited for the pivot point to pass, he could have easily made a profit of 200 points or more on that cotton trade. If your system says get in, you get in, else stay out and wait. No matter how lucrative the opportunity seems. But if you think that the market is going to make a big move and your system is not giving any signal, you trust your system and stay out. That's not your trade. No matter how convinced you are. This is where discipline and patience, the two crucial qualities that separate successful traders from the rest, comes into action. Whenever you're running out patience, just repeat this quote to yourself. Remember this: when you are doing nothing, those speculators who feel they must trade day in and day out are laying the foundation for your next venture. You will reap benefits from their mistakes. Jesse Livermore. Or this one: if most traders would learn to sit on their hands 50% of the time, they would make a lot more money. Bill Lipschitz. Discipline to stick to your trading system and the patience to wait for the right time are two most powerful weapons in trading. These qualities are what makes a trader successful, not some secret strategy or analysis. In fact, highly successful traders use very simple price action strategies for their system. Many people think that traders who make lots of money in the market do not miss out on any market move. Many believe that these traders possess an uncanny ability to enter and exit the markets at precisely the right moments to capitalize on every price movement. However, this could not be farther from the reality. As a matter of fact, successful traders, they all miss out on great moves all the time, but they simply don't care. Their number one priority is their trading plan. They have such a great amount of trust in their system that they know that unless they have a clear signal based on their trading plan, it's not worth the risk. They trade their plan, not what they think they should trade. They understand that no system is infallible, and there will always be missed opportunities in the market. You have to realize that. You cannot catch every money-making opportunity in the market. This is a hardcore fact. Realizing this, they don't run after opportunities. Instead, they wait patiently and let the opportunities come to them. There is a big difference between the two. What sets successful traders apart is their unwavering commitment to their trading plan. They prioritize the preservation of capital and long-term profitability over the fear of missing out on a single trade. They know that chasing every market move can lead to emotional decisions and erratic trading behavior. Successful traders also embrace the fact that markets are constantly evolving, and there will be countless opportunities in the future. They don't dwell on missed trades but focus on executing their strategies consistently. This approach sharpens their mental discipline and they stay in control of their emotions. Moreover, these traders understand that trading is a probabilistic endeavor. Even the best setups won't guarantee a profit every time. Instead of trying to catch every move, they aim for a high probability of success over a series of trades. This mindset allows them to stay patient and selective, reducing the impact of FOMO on their trading decisions. Conclusively, successful traders do miss out on market moves, but they remain unfazed by it. Their confidence in their trading systems, commitment to discipline, and focus on long-term goals enable them to conquer the fear of missing out and navigate the markets with a calm and calculated approach. They know that consistent execution of their trading plan is the key to sustained success, rather than trying to catch every fleeting opportunity. Please like the video and subscribe to the channel if you enjoyed it. Thanks for tuning in, and I'll see you in the next one.